There's Franklin Pierce, who was one of the presidents we don't remember, and then there's Hester Peirce. And I want to make sure, it is Peirce, correct?
It is Peirce,
Fantastic.
Yes.
I think I called you Pierce on a conference call.
I'm related to the philosopher, not the president.
Yeah, nice. I see you've done this before, Hester. Thank you. Yes, unfortunately, I do race cars. It's a good way to turn money into noise. Been a 31-year run. I think I'm winding. By the way, there's 2 Hokie national champion car races in my series. I don't know if they come back much, but there's some fast Hokie drivers. Anyway, let's talk about something else, which is the speed of change in sort of what we just talked about with Brendan. And I am honored to be speaking with the Securities and Exchange Commissioner, Hester Peirce. It's a real pleasure, Hester. Thank you. It's nice to meet you as well.
It's nice to meet you. Thank you, Brian.
Now, where did you grow up? Where are you from originally?
I'm from Ohio, Cleveland, Ohio.
So we got Brendan from Iowa. You're from Cleveland. The Midwest is running the show.
The Midwest is running the show as it should be, much as I think Southern Virginia is beautiful, but the Midwest is.
What are your thoughts on Baker Mayfield? No, I'm kidding. Let's move on.
Don't be mean to me.
I will not. Okay. Absolutely not.
I have to give my disclaimer before we get started, which is that my views on Baker Mayfield and anything else are my own views and not necessarily the views of the SEC or my fellow commissioners.
And she does have to do that, and that's good though, because now we're free to have a conversation.
That's right.
So you got the advantage of going second, so you kind of see the style, right? Which is no style, it's just luck. You heard a lot about
the goalpost thing now makes a lot of sense to me though after watching you.
It was a long time ago, and Virginia Tech was very bad at football, so we beat UVA, and it was like a reason to. Can you imagine that? Beating UVA was a reason to tear down the goalposts. That's how far we've come. We may not be there yet, but that's how far we've come. You heard from Brendan, obviously, and I think it was a great conversation, and many thanks to him and his team for agreeing to do this. You heard it. Is there a sort of an SEC, when you're listening to him and you're thinking, what stuck out to you about that industry from your seat at the table?
Well, I mean, to me, there's a little bit, I really enjoyed the conversation. There's a little bit of frustration for me, and the frustration is that, as a regulator, I see why someone is needing to be very kind to regulators, because that's the world we've set up. But I worry about what happens to innovation when people are always thinking, what does the regulator think about what we're doing? And again, this is not an argument for us to get rid of the regulatory framework, but it is a worry to me that regulation is such a big feature in all of these discussions about this industry and about the technology.
Do you feel that your agency, speaking for Hester Peirce, of course, is able right now to manage and understand this incredibly fast-growing and decentralized technology?
Well, we have a lot of people at the SEC who are spending a lot of time, and I would say a disproportionate amount of time, given the size of the industry, on learning about it, thinking about it, and trying to provide some guidance. So from that perspective, sure, but regulators are never at the front end of that. The technology is moving fast, and that is as it should be. And so we shouldn't live in a world where it requires the regulator to understand everything that's happening in order to do the regulation. We have to have open enough regulation that's open enough to accommodate technological change, that it doesn't require us to say, wait, you got to come show me how this works first, and then I'll decide whether you can move forward. That can't be the way that we do things.
No, and there's countries that do that, and that's why we have the most vibrant and dynamic economy in the world. I think there is a feeling amongst, and when I say Silicon Valley, I'm just using that as a catch-all for technology companies in general, whether or not they're physically based there or not. I think there's a sort of a modus operandi, which is beg for forgiveness, don't ask for permission. Just move fast and break things, according to Mark Zuckerberg, right? Sometimes maybe they're trying to break the SEC or the DOJ because they just want to get it done, and then they'll kind of be reined in later. Is that the best framework? Is that the best environment?
Well, I mean, as a regulator, I'm not going to tell people come violate our rules and then ask for permission afterwards. But I think that we need to have a framework that's broad enough to allow people to do lots of things without coming to ask us for permission. And the system that we've set up right now is not that. And I think, the financial financial markets, as you know, are highly regulated. And so it's not only in this area, it's in other areas that I worry that innovation can't happen because there's so many rules. You run into so many rules that you can't do things. And so what we need to do is we need to do a better job opening up our regulation so that we're not making predictions about which technology might or might not succeed. We're not picking winners and losers. But we have a lot of work to do on that front. And that was one of the things when I came to the SEC that I was hoping I could push forward a little bit and really help us to think a little bit more in a healthy fashion about innovation. We tend to be so conservative because we're scared, and rightfully so. Something bad happens and everyone's blaming us for it. So I'm trying to both change the attitude at the SEC toward innovation and then change the attitude outside the SEC to say, hey guys, we want to give you a little more freedom to do more of what you want to do, but when something goes wrong, don't come crying to me about it because I am not going to be sympathetic.
Wow, I like you. I knew I liked you. I like you a lot more now. How's that going, by the way?
Well,
Hester Peirce against the world, like, you know, I mean, you're
look,
the regulatory world.
There are other people at the agency who feel similarly, and so I think there's some progress on that front, and I hope there'll be more. But I mean, I was just talking to Brendan, and he's had the same fears that I have, which is that we're seeing a lot of people come to us and say, you know what, we want to shut the U.S. out. We want to affirmatively shut the U.S. out because then we can do what we want to do and we don't have to worry about running into regulations in the U.S. That's an extremely bad position for us to be in. I think this country has gotten to be as prosperous as it has and as much of a beacon as it has because people have wanted to come here because we've been the best place to innovate. And that's what I want it to be again.
Well, you look at the automobile, right? I mean, the automobile existed long before there were stoplights and stop signs and maps. Everyone's just driving around, sometimes crashing into each other, right?
Sometimes bad things happen,
no speed limits. Yeah. But the system evolved after the car. The car was,
right.
You know, pretty much everyone had a car and then they started to make laws. You didn't even have to have a driver's license. I mean, you could fly a plane. If you could just buy one and fly it, you could fly it. No one cared if you had a license. Where are we then in the development of sort of the regulatory schema for blockchain?
Well, I think so my views on this have actually changed. When I first came into the job, and started thinking about how do our rules apply to crypto, I thought, all right, you know, we've designed the rules to be fairly flexible. So, you know, our definition of security is pretty broad, and it can adjust as new things emerge. But now that I've seen more of what's going on in the space and seen some of the problems that people are running into, I think we really need to do something clear, which in my formulation would be a safe harbor for these token networks to develop basically outside of the securities laws. And so then you'd have a period of time that you could develop. At the end of that 2 or 3 year period, if you didn't have a functioning network, all right, well then let's talk about applying the securities laws to you. But in the meantime, you've got freedom for your tokens to move around, get into the hands of people who are going to be using them in the system. Without something like that, it's really not clear to me how these networks can develop.
Well, Block One is in a good enough position where they could afford that army of lawyers that we talked about. Many aren't. Is that part of the thesis? Is that it's just if you force them to evolve in that bubble, don't give them your grace period, they're going to fail in part because they can't build out.
And that's exactly my worry, that we can't create a system. And I've talked to a lot of people in the tech space who've said, you know, we had an idea to do X, Y, Z, but we gave it up because the regulatory costs were too. We can't afford a lawyer who can work through all of that for us. So we moved into a space, to your point earlier, that was a little bit less regulated, and that's where we're doing our innovation. And that's, for me, that's terrible because I'm looking at our capital markets and I'm thinking there's so many pieces of our capital markets that are really antiquated that could use a technological infusion, and we're basically shutting the doors and saying can't happen here.
Well, whenever they have sort of a big new regulatory thing in government, it's not an anti-government statement. that I just call it stimulus for attorneys.
Exactly.
Right.
And as lawyers, we like that, right?
I'm not a lawyer. I have a law degree. I'm not smart
well,
enough to be a lawyer, but I mean, listen, I call it career insurance. You never know.
There you go.
TV is also being disrupted, in case anybody hasn't noticed. So when you look, what's your next step then in this goal? I'll call it the Peirce effect, if you don't mind. I mean, how are you meeting? You said there were some like-minded folks inside the agency. It's a big agency. It's powerful. Where are you in this process?
Well, and so it's not only, I think the point has been made too about the fact that we've got lots of regulators here in the US, and so it's not only about talking to people at the SEC, it's about talking to my colleagues at the CFTC and trying to talk to other folks here domestically and internationally. But in terms of, I think I'm trying to sketch out this safe harbor framework, welcome input from anyone who has ideas on it. And so that'll be probably the next step. But I think we might think about having, and I always hesitate to create more bureaucracy, but I think maybe an Office of Innovation at the SEC would be a good idea, which would be a way for people to come in and kind of get shepherded through the system. It's so funny to me when people with computer science backgrounds come into the SEC and they say, oh, I read the rules, I read this one rule, and now we know how to navigate this. And I'm just thinking, oh yeah, and did you also read the thousands of pages of interpretations and guidance that went out around that rule? And you have to hire a lawyer who has the inside line to know all that stuff. I mean, it's sad to say, but even by reading, it's a barrier to entry.
A huge barrier to entry.
It is.
And do you think it will be solved? You're fighting obviously your battle, and you've obviously got your ideas, which is great. They're refreshing to hear. Will it change?
Well, I don't know. I mean, bureaucracies are powerful forces for conservatism. So, I think it takes people willing to go work in bureaucracies and come comment to us and push us and make the case that we don't have to tie ourselves up in bureaucratic hoops to get things, to have a society that we like living in.
You sort of indirectly mentioned something, and I didn't even think about it before, but now there's so many governmental agencies will often compete with each other as well, right? For sort of regulatory authority and whatever. And so you mentioned the Commodities Futures Trading Commission, CFTC. By the way, the former head of that went to my high school, which is Sharon Brown Bruska. I don't know if you know her.
Oh yeah, I do know her. Yeah, she's wonderful. Yeah.
It's just her and I and Patsy Cline. Who is best positioned to oversee blockchain and Bitcoin? Is it the CFTC because it's kind of a commodity?
I think it depends on what you're doing. I mean, there are certainly digital assets that people are using to raise money just as they would any other security, and that should fall within our jurisdiction. But there are other aspects of it that might be regulated by the CFTC or the FTC. Someone came up to me recently and said I should be talking to the FCC.
I thought about that as well because of the technology aspect.
Exactly. So I guess you could get a plethora. And then the state regulators are very involved in various aspects of this too.
Really?
So
agency soup.
It is, yeah.
And where does the government stand in sort of, you're trying to do two things at once, right? You're trying to understand this new industry that's being built out very rapidly by companies like Block One, and at the same time, you're also probably trying to deal with sort of governmental squabbles over who's in charge here, right?
Yeah, so, to some extent. I mean, I think so far people have been, at the different regulators, have all been sort of cautiously feeling their way around and trying to figure out what's going on. The CFTC has been quite a bit more forward thinking. I mean, we have Bitcoin futures now because we have a CFTC that was willing to allow that to happen, whereas when people come to us and try to build exchange traded products that have underlying Bitcoin underlying, we say, oh, that market looks so scary to us, so sorry, not going to happen. So the CFTC is a little bit ahead of the game. Someone came to me recently and said, I think really what you need to do is you need to have someone centralized to be sort of a blockchain czar in the government. And I said, well, when I hear that kind of thing, I'm thinking 5-year plans, I'm thinking the government trying to run things, and that never works out well. So I don't know. I mean, maybe.
You sure you work for the SEC?
Maybe it is good to have some kind
Hester
of coordination.
Peirce?
I don't know. But I do recommend that other people who are, I think it's good to have some people in government who are a little skeptical of government.
Yes.
So I think it's not.
An applause there. Dan Larimer's
Again,
standing ovation from Larimer.
It's not because I'm trying to throw my colleagues at the SEC under the bus. People come to work at the SEC. They really care about our capital markets, and they want to do best by our capital markets. But I think you need to have sometimes voices saying, all right, look, I know we can collect tons of data now, and I know we can process tons of data now, so we can basically know what all of you guys are doing in your trading lives. But should we really know that? I mean, if you haven't done anything wrong, what business do I have to know what you're buying and selling in the stock markets? I'm not allowed to know that in other markets.
Well, they say it's not a stock market, it's a market of stocks, right? And there's a lot in there actually to unpack when you think about it, which is whatever the item, whatever the product. So going down that road, and this is the part of the program that may or may not appear on CNBC tomorrow, do we need a Bitcoin ETF?
I mean, I won't say need, because my point of view all along has been, let's allow this thing, because I don't see in our rules anything that justifies us stopping one from happening. And again, the details do matter, but we've had a number of different possible formulations. So assuming that the formulation fits within our rules, there's nothing that we have that can stop it. And then it's up to the market. I don't know whether the market will like it. We've seen some things where people have fought so hard to get through all of our different aspects of our agency to get something to market, and then the market says, we think this product is terrible, we don't want it. All right, I mean, let investors make that decision and not me.
But you did stop it.
Well, I didn't personally, but I dissented, so I tried to allow it to move forward. We have a number of other ones that are in the pipeline, and maybe one of those gets through. And again, I along with my colleagues will look at that at each one based on its facts and circumstances.
Do you believe that in time we will see a Bitcoin-based or a crypto-based ETF?
I mean, I think probably, but as there are a lot of people who want one just because they're hoping it'll drive the price of Bitcoin up, and that kind of drives me crazy, because then they're all, they're coming to me and saying, when is it going to happen? And so I say, look, exchange traded funds, just generic exchange traded funds, have been around for 25 years. When did we adopt a rule to regularize them and to allow them just to go forward without getting permission from us? About a month ago. So 25 years? I don't know. I mean, it could take a really long time.
So what's the biggest hurdle? I know you dissented.
No, I think the biggest hurdle is that people are very worried about the underlying markets, and you get lots of stories, lots of academic articles about market manipulation in the underlying markets. And so that is something that definitely gets the attention of people at the SEC.
Do you think that a Bitcoin or a crypto-based ETF would, at least at the beginning, drive up the price of Bitcoin?
I can't even, no pun intended, speculate on that. But I, literally or figuratively, actually. But I don't know what the effect would be. I think people would be interested in the product, because I've heard from a lot of people that they're interested in the product. But again, it will depend on what the product is actually, how it's actually designed, and whether people think it's going to work or not.
So do you believe the failure, sort of the rejection of it right now, was more due to just either they didn't feel like the regulatory environment or the whatever you want to call it was in place, it was developed enough, maybe it was too infant to be approved, or is it just a general fear of the underlying technology not understanding?
No, well, I think part of what it is they look at the market for Bitcoin and other cryptocurrencies, and they say, hey, it doesn't look like a regulated market. It doesn't look like the equities and options markets that we know. And my response to that is regulation comes in many forms. One form is the kind I provide. The other form is the kind that markets themselves organically provide. And so people who are trading in these markets, they want to be trading on platforms and in markets that they believe are legitimate markets functioning with proper discipline and proper transparency. And they're not going to participate in markets that are not that. Maybe in the short term, sure, because they think they can make a little money. But in the long term, is that really where you're going to do your buying and selling? I don't think so. And so there are a lot of markets that have, and I've said this many times, but there are a lot of markets that have messy aspects to them because of where commodities are found. I mean, you are a commodities trader, so you know that. There's some rough and tumble in those markets too. And so I don't think we should assume that every market has to look just like an SEC-regulated market in order to build an SEC-regulated product on top of it.
Best guess, 5 years, we have a Bitcoin-based ETF?
I'm not going to make any kind of more specific speculation, but nice try.
Of course.
Yeah.
Why do you think I drove down here? Because there are some in the media who have a keen interest in ETFs and are starting to poke around the industry generally. So it's a little bit off topic, but the size of the ETF dollar volume trading market is now 6 times larger than the stock market, from what I understand. I mean, ETFs are their own asset class that often have very little to do with the underlying equity.
Right.
Speaking for myself, not for my network. Do you worry about the ETF market structure?
Well, I think that all of us, as ETFs have grown, and ETFs have been really a wonderful innovation from the perspective of the retail investor, allowed the retail investor to get access to the markets in a way that's extremely cheap, and allow them to get diversified access. So that's a positive. But we also do look at it, as the market has grown and as the number of ETFs has grown. Of course, we're looking at what effect it has on the broader markets. So far, I haven't seen anything that says, oh, we have to shut this market down, but we pay attention to it. Our economists are looking at this all the time. There have been a lot of studies, both by people at the SEC and people outside the SEC, looking at these issues, and so we're cognizant of that.
Again, it's a little off topic you'll forgive me, this is the price I paid to come down here, was I wanted to ask her a couple of these questions, which is, the average size of a stock trade in the market is shrunk. It's tiny. It's like 138 shares now. It's fallen by half.
Well, in part,
and yet the value of ETFs have just soared. I'm not knocking ETFs; they've done great.
No, but
They're
part
cheap.
of the reason that the size of the trades has fallen is because of some things that we've done in the market structure space in terms of mandating how trades have to happen and where they have to happen. And we can talk about that. That's another area where I think the idea that the government is the one that has to construct a market and tell it how to operate, which we do in our equities markets, is laughable to me. There's no reason that we need to be playing that central of a role in dictating where orders trade. So we can go back and work on that, but that's a big undertaking.
What was it then that you think the SEC has done that has shrunk the size that the average trade?
I'm sure there are a lot of factors. So I'm not saying that we're the only factor, but I think one factor probably is regulation NMS, which and the order protection rule, which governs how trades have to flow.
And that's a market structure. NMS is a little bit wonky inside how the markets operate, and
But I mean,
so I don't want to go down the weeds there, because that's not why we're here.
Right, there have been lots of changes in the equity markets. And again, our equity markets serve people quite well. Retail investors, again, pay so little to trade, and trades happen. There's liquidity there for many stocks, not for all of them. But high frequency traders are very active in these markets as providers of liquidity. There may also be some of that influence on the size of the trade falling.
Because the stock market, and this could be a learning, I guess, example for crypto as well. So I don't want to beat this horse because that's not why we're here. But the stock market fell 18% last December. Quickly recovered. And everyone's like, oh, it's because the Fed raised rates and everything shifted. Listen, I've been doing this a long time. An 18% drop in the equity market, single biggest drop in any December ever. I think maybe going back to 1928. And there are some who thought that the market structure currently exacerbated that. The industry will deny. And I'm not saying that they're at fault either. I don't know. I'm curious because the industry, like so many, has gotten so much bigger, I think, than most intended. Is it too large?
Well, I think one of the things that our chairman, Jay Clayton, and his head of trading and markets, which deals with market structure, what they're making a concerted effort to do is take a look broadly at market structure and figure out, are there areas where we need to make some changes in our rules that have those changes distorted the way things happen? So I think it's a complicated web, and figuring out which thread you have to pull to get what to happen is difficult, but we're looking at it from a number of different threads.
Is it a growing conversation inside the SEC?
Yeah, it's always a pretty active conversation, but I think it has been in the last couple years. Now that we're past most of Dodd-Frank implementation, we're able to think a little bit more about those kinds of issues.
Is Bitcoin a currency, a commodity, or something else?
Well, I've been pretty careful not to weigh in on whether or not any particular crypto is a security or not a security. I think a lot of people are using Bitcoin as a store of value. A lot of people, I mean, it's not being used in a currency the way maybe it was envisioned it would be, but in some places it is. So I think it's being used in a lot of different ways.
Do you like being known as Crypto Mom?
I mean, I have said before that I always wanted to be a mom, and so who knew that this would be how it would happen?
I mean, you are, from, people I may or may not have talked to inside the agency, seen, and we've learned here today, a forward thinker. I mean, I don't mean that as any disrespect to any of your colleagues otherwise, but it's, you're, in your own ways, you even said you're sort of out here. How does that take us inside your day-to-day? How does that play out? Are you fighting all the time, or is it more of a soft?
I mean, one of the nice things about the SEC, and it is important to point out, the SEC is a commission, so there are 5 of us, and we're a politically balanced commission, so you get a variety of viewpoints, which I think is quite healthy for the discussion, and we discuss lots of things. We have, I think, relatively good-natured disagreements, and so most of it is fairly pleasant. I would say, I've talked to a lot of people from the outside as well, and I encourage people to come in and tell me what they don't like. I had someone come in and ask me last week why I hate investors, which, look, I think I don't hate investors, for the record, but I think it's great that people are willing to come in and ask me those questions.
Say people, I mean like random people off the street or other members of the SEC?
Oh, no, it wasn't a random person off the street. It was a lawyer who was coming in representing someone.
Okay.
Yeah. And, I mean, I thought
do you hate
it was
investors?
Yeah.
Yeah.
Well, he sort of made it the premise of his question.
I don't hate investors. I hate you.
He made it the question, since you hate investors, blah, blah, blah. And I said, well, I disagree with the premise of your question, but, bright minds can differ on these things.
Can you take us deeper inside this polite discourse and debate thing? Because I'm not sure we're good at that anymore.
Well, one thing I should say, too, that makes it a little bit awkward at the SEC is that we have the Sunshine Act, which means that you can't put all 5 of us in a room together to have a substantive conversation unless it's open to everyone, with the caveat that we can talk about enforcement cases behind closed doors. But normally, rulemaking stuff all has to be in public. And so that means if you want to have a conversation, you got to do it one-on-one with your colleagues. And so that is a little bit more difficult. But I mean, look, I really firmly am of the view that I take sort of a Hayekian approach, right? So I think that knowledge is not concentrated in any one person. It's spread out across society. And so you want to have a number of viewpoints kind of fighting it out at the SEC, but doing so in a very polite way. I think that's really important because the experience of all my colleagues is different than my own. And so I want to hear their perspectives. I want to hear what they're thinking. I may not ultimately come to agree with them, but I think it's really healthy for us to have that conversation.
Would you want it all on the blockchain ledger? That's the question.
Well, maybe that is the ultimate Sunshine Act, right?
Well, that's the whole. I think that's part of our conversation that we just had with Brendan, right? Would the government, the SEC or any agency, benefit from blockchain?
But I mean, yes, we would benefit from blockchain perhaps in certain ways. I think in terms of our discussions, it's probably more positive to be able to have some discussions behind closed doors so that you can hash some things out.
And what are some of the biggest either hurdles or misconceptions or fears that you or other ranking members of the SEC have around blockchain, Bitcoin generally?
Yeah, I mean, I think the concerns are, one, the concern that this is all about illicit activity, which is, I find it kind of funny because when you think about illicit activity, the most illicit activity happens in cash, right? That's where the bulk of the activity is. So there's that sort of dated concern. And again, any technology that you have, people are going to use it for good things and people are going to use it for bad things. So undoubtedly there's bad stuff happening using this technology. But then I think the other one that we've talked about is market manipulation. Mm-hmm. And then there are just some really practical questions of how does it interact with if these things are securities, how do they get treated we have an insurance scheme for broker-dealers. How does it get treated for that? How do you custody this? How do you think about custody in this space? How does an auditor go in and look at where these assets are and whether you have exclusive control over them? So those are the kinds of questions that we're asking. And I think they're ones that we're making some progress on, but I still invite people to come talk to us about them because the more that you can allay our concerns in some of these areas, the better it is.
And again, I may sound dumb on this because I'm not an expert, but this is where my sort of hang up is just as a person thinking about it. And, when we're talking to Brendan and a lot of the conversation about blockchain is transparency. But yet, when it comes to Bitcoin, it's all about sort of, to your point, untraceable. You don't have to worry about governments intervening and interfering in the currency market, and I have trouble squaring the two.
I think I disagree with that. Good. I think there was a couple weeks ago, there was a big child porn ring that was broken apart, and part of the reason it is because someone could go in and do the analysis on the blockchain and figure out who all the people were. That wouldn't have. There was
an article in the New York Times about this yesterday. It was spectacular, by the way.
Oh, was it? I didn't see that. But so, I mean, I think that's an example of how it's actually not as difficult to trace back as you might think. And that is part of the transparency.
So do some of because again, I would never generalize any community for any reason. But, with the Bitcoin community in particular, not the blockchain, because I think
there is a difference.
Am I right, Brendan? There's a difference between Bitcoin and blockchain. The communities are similar but different, right? Is that fair to say? Very. Okay.
And that's why people at the SEC, they always, if you say, what do you think of Bitcoin? They'll say, oh, blockchain is wonderful. It has such potential. Because they don't want to be associated with a crypto asset. But blockchain is great.
And how do you view the difference, just personally?
Well, I mean, I think blockchain is a technology on which some of these crypto assets are built, and so it's fundamental, but I think there's real potential in the crypto assets themselves, and so I'm not going to run away from those.
Yeah.
And I think what you're getting at is that there is an element that wants the anonymity and wants to be able to do what they want without the government being in their business, and then there's the blockchain part I think some of these blockchains are going to be centralized in the sense they're going to be controlled by a company and used by a company for a particular reason, and so they're permissioned blockchains. And then there are the permissionless blockchains, which have a little bit of a different audience, right? But I think that there is room for permissionless blockchains, and I think there's a real value to having civil society be able to do things without the government's involvement. And that is one of the hopes that I have. And again, I'm not a technologist. I don't know what the future holds, whether this will succeed or not. But I like the idea of being able to bring people together from all over the world to work together on a project And this technology, I think, enables that in a way that we haven't seen before. And that has really positive implications for a woman in Bangladesh who has no way to earn money except go work in a factory where they shut the doors and tell you you can't leave until you're done with your quota. Now she can be at home and she can be working on something and have much more control over her life. To me, that's really positive, right? And so let's look at some of the positives of that, and let's allow civil society to build things without having the government controlling every step.
And that's the power. I mean, there are women in India who have to pay 30% of their daily wages to use the bathrooms, which are controlled by low-level gangsters, because it's a cash payment system. They literally have to pay 30% to use the bathroom with dignity because some low-level thug is guarding the door. I mean, so there are applications.
That's exactly. I mean, we can shift the power dynamic, and I think
scary,
that's really,
though. That scares a lot of people, Hester.
Well,
I'm scared.
I think it'll.
But
be
about
okay.
a lot of other things, not this. I'm fine with this. It's scary. You're talking about big things.
I think that the future is always a little bit scary, and technology does have bad implications too, right?
So anybody here know what the Silk Road was? The online drug bazaar, guys clapping, is their biggest customer.
So interestingly, I just read a book about the Silk Road, and it was fascinating to hear about the development.
The Ben Mesrick book? No, it was who's not Ben Mesrick?
It was American Kingpin.
American Kingpin. I read it as well.
Yeah,
I listened to it on Audible.
I listened to it on Audible too.
We spend a lot of time.
Right, yeah.
You know what's funny about? I always say I read this or read that. I never know what to say because people are like, there's no way you read that much. I'm like, you're right.
But
I spent a huge amount of time. We drove here. I'm driving back to New Jersey right after this. That's a lot of time. And I'm listening to the new Greg Zuckerman book, The Man Who Broke or Solved the Markets, about Jim Simons, the billionaire hedge fund guy.
Interesting.
It's amazing how many great books can be destroyed by a terrible narrator, isn't it?
That is true. I have examples.
Yeah, there's examples. I'm like, this is really interesting, but the narrator is horrid. Yeah. And anyway, let's move on. So anyway, great book, American Kingpin, by the way, another recommendation. And there is a school of thought, and I'm not endorsing this or saying I believe in it, that Bitcoin became big in large part because this online drug bazaar run by, apparently, again, this conspiracy theorist, whatever, Ross Ulbricht, one guy, effectively, and a couple others in remote locations, enabled the purchase of basically whatever the hell you wanted. You want a hand grenade, you want drugs, you want a bazooka, you got it. And the illicit beginnings pushed Bitcoin up. I'm not saying I agree with that, but you know that exists.
I think we have to separate discussions about what we think should and shouldn't be legal in terms of products with discussions of payment systems and how people are, what mode of payment people are allowed to use and not use. And from my perspective, again, I'm a securities regulator. I'm not a regulator, I hope, of any kind of products that we're trading on the Silk Road. From my perspective, I want to make my environment that I regulate as free as possible for people to make their own decisions in a way that's consistent with my obligation to protect investors, facilitate capital formation, and protect the integrity of the markets. So that's how I view my thing. I want to maintain the broadest amount of liberty within the space while still achieving those objectives.
I think I got a block one table. It's giving you a head. The reason I bring that up actually goes back to that, which is the idea of there are a lot of entrenched systems where people have a lot of billions or hundreds of billions of trillions of dollars involved in the process. And I've interviewed people, and you watch TV or you read, and there's a default around Bitcoin where people that don't have an interest or in it getting bigger or afraid of it or have other motives will always default to, we don't need an industry that was developed and built to trade drugs, guns, and child porn. And they just go to that as a blanket disregard. And I think, and answer this, does it affect Bitcoin or blockchain's ability to be created into real financial products like ETFs because there's an innate sort of,
no, I think
it started off with a black eye. Is that a fair way to?
No, it has had that reputation. But I mean, I think it's funny because we should ban cars too, because I've heard about people transporting drugs in cars. I've heard people transporting
There was a couple edibles,
All
and I didn't know
kinds
they
of
were in the
things,
drug.
right?
No, I'm kidding. It was joking.
Anyway, I'm crypto mom, so I condemn all of that stuff. But all I'm saying is that people use cars for all kinds of bad things too. And so we've got to separate the technology from what people are doing with it, and we have to deal with what people are doing with it separately. So I don't have a problem doing that, and I don't understand why my colleagues have such a problem doing that.
Well, what do you think?
I mean, I think it's the conservatism that is a natural reaction for a regulator, because when things go wrong, look what happened after Madoff. People came to us and they said, why didn't you stop Madoff? And so there's never, again, I wish we had. I wish that there were definitely failures at the SEC that led to that. But we cannot promise a perfectly safe society if we want to have a free society. And so we have to be willing to make those trade-offs. And if you're a regulator, you're going to typically be on the side of wanting to have more protections in place so that when something goes wrong, they're not going to come and blame you.
I don't know. I don't know if it's Ben Franklin or Ben Roethlisberger. If you trade safety for liberty, you'll have neither.
Yes. I don't think it was Roethlisberger, but
no, it was the other one. Okay, Baker Mayfield maybe. The point I'm trying to get at is this sort of the when we look at this interesting, fascinating industry, which is why so many people are in this room on the blockchain side, which is different than the Bitcoin side, because there is a difference. Do you feel like it all gets lumped into that same basket, and that would hinder new product development? Am I making any sense at all?
No, I mean, I understand
No,
what
I'm
you're
not?
asking, but, well, I mean, I think that this is kind of the quality of some of the debate about crypto assets at regulatory agencies. It's like, ooh, this stuff is really bad. Did you know someone used it for something bad? And, what are you going to say to that? Okay, I mean, people people are in Popeyes killing people for chicken sandwiches. We should ban those too.
They're delicious, actually. Don't ban them. Have you ever had one?
I haven't had
They're
one
really
yet.
good.
I'd like to, but now I'm scared.
Yeah, they're really good. I mean, it's and I don't want to get into this because this is a dangerous road for me to go down, but it's the society we live in. Trust me, from my little perch, I found, how about this? I found that when people don't want to engage in a real debate, name calling begins immediately.
Right.
Or they try to take this moral high ground where if you make the counter argument, you're automatically a terrible human being.
Right.
You guys know what I'm talking about? Where it's like somebody says something and they go, well, think of the children. And you're like, okay, what can I say? You're right, because I love children and I don't want them to be hurt. But you can't even have an engaged debate about a lot of things because people just immediately...
No, and that happens at the SEC all the time. I say, you know what? I think we should think about maybe allowing people to invest in what they want to invest and not saying you got to be wealthy to invest in private securities. And the response is, you hate investors. And I'm thinking, no, actually, I'd like to expand their opportunities. But once you say, well, you don't care about protecting investors, the conversation's over.
Wait, that lawyer was arguing that?
No, he wasn't. It
I
was
was going to say,
something
because that
else.
guy's a ding-dong.
Yeah, no, it was something else.
Like if he's arguing about private $100 million minimums that you hate investors, doesn't even make sense to me. Good, I'm glad it wasn't the same person. But you know what I mean? Debate around, and this is not really a blockchain or Bitcoin conversation again, but just debate generally, and I imagine it's the same thing for you, it sounds like it is. The quality of debate has gone so far downhill.
Yes. Right.
It's just, and so when you encounter, I'm sure people, just to your point, it's been used for bad things, shut down the dialogue. Are we going to get past that?
I think we will. I mean, I think and this is what I have said to folks when I talk to them, and Dan asked me today, what can we do? And I say, let's show people that there are use cases, that we can all agree are good things. And so that, I think, is what ends up winning people over to say, oh yeah, I can see how this could actually transform my life for the better. Sure, cell phones are used to negotiate drug transactions, but they're also the way that I check on my kid and make sure my kid is safe. So we decide that we like cell phones, even though they're used for some illicit purposes.
Yes, and I think that's an excellent point. Listen, there's also been and Congress writes the laws. Let's remember that. There's been a huge turnover in Congress. I mean, gosh, I'm 48. I graduated from Tech in '93, and there's still a couple people in Congress who were in Congress when I was born. And so, they're vested in that industry. Do you think there's a lot of young new faces on both parties that are coming in, a lot of turnover. Do you view that as a positive?
No, because I think a lot of young people who I don't think it's an age thing. A lot of young people who are regulators or who are politicians are extremely controlling in terms of what they think the government should be doing. So I don't think it's an age thing.
Even some of the younger ones, they're dogmatic.
I mean, I think it's more a point of view thing, and it's a willingness to take the risk of being criticized.
We heard from Senator Mark Warner, and Mark's a semi-friend of mine. He's a great guy, obviously built a huge business in Nextel, and he is arguably the most, or maybe one of the most powerful people in Congress for probably the future of blockchain and Bitcoin from a national perspective, from security and financial transactions. I'm sure you interact privately, professionally, socially with many of the lawmakers, either the congressmen and women themselves or their chiefs of staff. What are they talking about with regard to Bitcoin and blockchain?
Well, I think the interesting conversation has really come to light post Libra, because Libra really forced everyone to start thinking about it, whereas before there was only a small group of people who were really thinking about it, either on the side of we hate this or we love this. But I think you see the difference when you watch those hearings, for example, and you see that there are some people who are really interested, and you see a level, which I think is generally good, a level of real interest from across the spectrum in Congress. And I think you'll see that you can look at where legislation, draft legislation is coming from, and you're seeing that there are people who really care a lot about this space and who are trying to build a regulatory framework, a legislative framework for it that will allow it to develop.
I was looking at one of the viewer questions, which is probably smarter than any question I can ask, which is in 1999, I think it was the Digital Commerce Act, whatever, my brain is tired. They adopted sort of a do no harm policy with regards to e-commerce. It kind of let it go and sort of figured itself out. You think we're there? Is that the best policy path forward for Bitcoin and blockchain?
I mean, to the extent something falls within the securities law framework, that's just not going to be how it tends to work unless we really set out to create some kind of safe harbor, some kind of ability for a sandbox. I've been sort of a critic of sandboxes, but I think a sandbox model could work with this do no harm.
I don't know what that means.
Oh, so a regulatory sandbox is where you can come in and say, hey, regulator, we want to innovate here. We want to change this, the way we can serve people, or we want to create a new product. Here's what we're planning to do. The regulator says, we give you our blessing to go forward, do no harm, just go forward. We'll be watching, and we'll be watching you every step of the way. But there's kind of a constant dialogue as the innovation happens. You're talking with your regulator. And so that's a framework within which some of this stuff can happen. I've expressed concerns about it because I think when you stick a regulator in the sandbox with regulated entities, the dynamic changes, the innovative dynamic changes, because you got a regulator sitting there. So I'd like to have a little bit more of a hands-off approach, and that's what I'm hoping the safe harbor could achieve.
She mentioned Libra. I'm sure everyone here knows, but for the one person that doesn't, it's Facebook's attempt at some sort of a current crypto, whatever you want to call. I don't like to call it cryptocurrency. I don't like the term cryptocurrency, as you heard me earlier. Right. Should Libra be allowed to exist?
Well, I mean, first of all, I should say that I've not read anything more about Libra than those of you in this room. I've read their white paper, and I've watched some of the hearings. So that is my base of knowledge. I have not met with them. And so, look, I think that people should be able to try all kinds of things. I don't know whether what they're planning to do runs into certain aspects of our securities laws. And because they're planning to do this globally, they've got a lot of regulation they have to think about. But in general, I believe in competition, and people should be able to try what they want to try. So you've got to deal with the regulatory framework.
Do you think your colleagues, because Europe has been a lot tougher on digital assets and digital companies, the Googles of the world, than we have in some ways?
Oh, well, but I mean, Switzerland too has been a little bit more forward thinking on crypto than we have. So
which is probably why Facebook's Libra is based in a consortium where? In Switzerland.
Yes, it follows.
So do you see the European regulators allowing this?
I can't even speak for my own one U.S. regulator. I'm certainly not going to speak for European regulators because they think a lot differently than I do, usually, on many things.
What's your personal take just on any company of any size trying to create a de facto currency?
I mean, again, I'm a believer in people being able to use the mode of payment of their choice, and so I'm not wanting to step in front of people making those choices, but I do, as with all things, you've got a grand idea about how to do something. You do have to think about the regulatory framework that you're operating within.
I want to ask a couple more, if the audience would humor me. I think these are interesting, but I want to ask a couple more questions, if I could, a little bit off topic, but just because they're important now. There was an article in the Wall Street Journal over the weekend that the SEC and WeWork were having problems with valuation metrics. Your comment on that?
Well, so one thing that a lot of people don't realize about the SEC is that a lot of what happens, we're a big agency, so I'm one of 5 commissioners. We make decisions on things. We vote on enforcement actions, we vote on rules. But a lot of what happens at the staff level. And so those kinds of reviews, the review that WeWork was going through in anticipation of an IPO, that would all be done at the staff level. And so I wouldn't even typically be aware of something like that. Because so I really don't have a comment.
One trend that we have seen, Hester, is that if you follow the private and public capital markets, private company, I'm old enough to remember when companies used to want to go public. And it doesn't seem like they want too much anymore.
They don't. That's part of the problem. That's
why don't companies want to go public anymore?
Well, I think there are a lot of reasons. So one is that you can raise lots of money in the private markets, and so if you can raise money there, then why would you even bother to go public? But why would you bother to go public? Because you want your stock to be able to trade, you want it to be liquid, you want it to be easy for people to be able to sell it, and easy for people to be able to buy it. We've put a lot of rules on public companies, and also it's not only the set of rules that exists now, it's the set of rules that might exist in 10 years. And we are getting pressure from a lot of people to ask public companies to make disclosures about a lot of things that are kind of out of left field. And so there's fear of what you might buy into as a public company. And once you become public, litigation is a real problem. And a lot of companies, a lot of smaller companies, when they go public, run into the problem that they actually don't get that liquidity that they wanted. It isn't actually that easy for the stock to trade because there just isn't that much interest in it. And so that partly goes back to our discussion before about market structure. We have a one-size-fits-all market structure. If we loosen the rules around that, you might actually see some innovation there, and you'd see that smaller companies could trade better because you could tailor the way the market structure worked for smaller companies.
I hear from so many CEOs at my level, I talk to privately or even on the air, that are they're frustrated by the capital markets. Because, if you're a mid-sized company, there's no analyst covering your stock anymore. Yeah. If there is, there's one or two. You never see them. You're stuck inside a bunch, and again, I'm not knocking ETFs. You're stuck inside of a bunch of ETFs. And these CEOs, you know what they're doing? They're cashing out. They're selling their company, or they're taking it private. Talking about Walgreens potentially going private. The biggest leverage buyout ever. The destruction of the capital markets. I mean, the public markets, you don't have a stock market. I don't know is there a risk here? Has the private market let me ask it directly. Has the private market gotten too big? Elizabeth Warren, and it's not a political comment, one of her plans is to change the way carried interest is taxed. Is the private market too big?
I mean, I think that people should be able to buy and sell pieces of companies in private markets or in public markets. It's actually a good disciplining factor for us to have a private market there. And if the private market is getting to be bigger and companies are wanting to be there and investors are wanting to be there, it tells us something about the way that we're regulating our public markets. And so it serves as a check on us. I think it's great for companies to be public because that's where retail investors are accessing the capital markets.
Yes.
So I want to encourage companies to go public earlier, but I think that requires us doing some soul searching and saying, are we imposing too many costs on these public companies? Are there things that we can be doing to make sure that analysts aren't being prevented by regulatory barriers to covering these companies? I think you raised a really important point. That's a point I hear all the time too. So are there things we can do to address each of these problems to make our public markets more attractive? It's a big challenge. It's one our chairman has talked a lot about and is working very hard on and cares a lot about.
Well, this thing called MiFID, which I won't get into, which I've done deep dives. You know, there's company paid research now. You know, that's the newest trend. Companies paying people to do research on their own company. That doesn't sound very...
But they're desperate to get people to pay attention to them, and that's the only way that, I mean, we need to do things to encourage there to be objective third-party research.
One of the parts of the American dream is that, you know, you discovered Starbucks, right? You know, in 1987, or Microsoft in 1981. And you bought some stock, and then, you know, now you're worth 100 million. Like, we hear these stories. I worry, just from my perspective, that you had the internet collapse. Okay, we come back. Then you had the financial collapse, the Great Recession, the market collapse. That turned a lot of people off the equity markets. Now you've got these billion-dollar companies called unicorns, which I hope that Block One is one someday, by the way. It might already be, by the way. And then when they go public, the stock falls. And it just pisses off a lot of people because they view like, well, the 8 private equity or venture capital firms that already control everything just got richer, and the retail investor gets hosed. And that's bad for capitalism.
It is. I mean, I want to encourage more people to participate in our markets. I want people to be able to buy into companies when they're at that beginning of the growth stage so that they can profit from the growth, and so we are taking that seriously and thinking about different ways that we can make sure that happens, because that is part of the American dream. I mean, that's part of the reason I love capital markets, because I think they both enable talent to be unleashed when you can get money to an entrepreneur who in other countries would never be able to get access to money. But when you can get money to that entrepreneur, it changes not only her life, but the life of her family and her community, right? So that's really powerful. But the other part of it is when you can get just a regular retail investor puts money in the markets and is able to watch that money grow and is able to take that money out to buy a house, an education for his children, or retirement. That's a beautiful thing, and we need to make sure that we really protect that. We have much better capital markets in the US than I would argue anywhere else in the world, and we need to treat it like the treasure that it is.
Do we need, and I know you're not a big fan of regulation per se, you've established that, and
Really?
Well, I mean, regulation, but I mean,
regulation has a place.
I think you had a let it breathe kind of aspect to you, which is refreshing.
Okay.
Do we need to better regulate the private capital markets?
Well, I mean, if you've got a willing investor and a willing company and they're willing to do a transaction, I'm not sure why we have to jump in the middle of that and say, uh-oh, you can't do that. What we do need to think about is, are there ways that we can allow retail investors to access the private markets so that they can be part of that if so much of the action is going to be in the private markets? We do need to have, there are certain regulatory parameters. Private markets are not completely free of regulation, nor should they be. And so there are some basic parameters, and those parameters are ones that we do and should continue to enforce.
How about this? Do we need to lessen the cost of the regulatory burden on public companies? Because I hear that from now CEOs like the wine, I get that. But
No,
They
we
have
do.
a point.
We
They
do.
have a point.
We do need to lessen that burden, and that's difficult because you want to make sure that you're getting investors the information they need to make rational decisions about the long-term value of a company. And so you asked me when I was sitting over there, you said, is it true that public companies don't want to give information out any more than they have to? And there is always that push-pull, right? The desire to keep things close to the vest, but the need for investors to understand what they're purchasing. So we're always facing that. And so getting the balance right, the regulatory balance right, is very difficult. It's the reason that all of you need to weigh in when we're thinking about changing our rules. And we need to have the conversation more broadly than just with SEC people.
This has been, and I know we got a little bit off the train there, but these are issues that I think are important to the capital markets. They're important to the SEC. They're important to the CNBC audience. And they should be important to everybody here because establishing a vibrant, open to the public, that's otherwise you're just going to have oligarchs creating these, private behemoths.
Right.
And then by the time they go public, you look at Ubers, and I'm not picking on any company here, but the Ubers of the world and many stocks which fall and they go public. And then by the time the retail investor gets it, he or she is ticked off. And the risk is they won't come back.
Yeah,
that's the risk.
And the capital markets have a really powerful ability to democratize the country, to spread wealth across lots of people, and we need to make sure that they're serving that function. So that's something that I think all of us on the commission, we come from different perspectives, but all of us care very strongly about doing what we can do to improve the way the public markets work.
Well, I, for one, I think it's a joy and it's a great thing that you are a part of the SEC, Hester, because you have a very fresh and refreshing viewpoint. And I want to say thank you for this conversation today. Let's give a big round of applause for Hester Peirce. And as a government bigwig, since we're both, if I get a speeding ticket driving back today, who do I call? Is there anybody?
Don't call me.
Yeah, I got like a number I can have, like a private number I can call.
You know what they say about lawyers who went to Yale?
No.
Never call them when you're in trouble. Call them when you want a theory about something.
Nice.
All right, sorry.
Hester, it was a real pleasure.
Likewise.
Thank you very much. Thank you for having us.